Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 28th of August, 2023, and we're at 6:20 p.m. Central Time. All right. Before I get into the markets, I start my Labor Day sale right now. Lasts just a few days. How do you take advantage? It's 40% off. So if I had a course that's $120, you're taking off 40% of it. My research, if you take a morning subscriber video that, let's assume, was $160, you're taking off, what, $64 from that. It's only available on my yearly research and the charting courses. It's not available. I'm not giving 40% off for you to go in and try 30 days. I don't want to do that. So if you want to come back, some of you quit for the summer, this is your time to take advantage. Want to give it as a gift? You can. Even on the charting courses, what you can do with this is you can pocket them. We don't start them till you tell us at Christmas, give them to somebody, or do it, take advantage this week. Take the courses before the season begins, which I think is on Tuesday morning. I think you're right into it, and the game's really full-fledged. That's how it works now. Nobody works in the offices, per se, and the markets don't need the long time. But people are out on vacation this week. They're in summer homes, they're wrapping things up. Not everybody, because the kids are back at school in large swaths of the country. All right, how do you get this? IraEpstein.com, go to research, or if you're on a PC, move your cursor up to the top here, it'll take you right there. So today was one of these days where it was watching paint dry on a wall. The markets made moves early, and then they die for the longest period of time. Volatility, basically on the open and the close, and expect more of that this week. But it's going to pick up because there are some important reports. We get more reports tomorrow, and then we start getting JOLTS data. I think we're going to get Challenger Gray, and then we're going to get ADP probably, and then we're going to get, I know we have on Friday, the U.S. jobs number. They're talking 117,000 jobs. That doesn't sound like very much. So if that number holds up, that is what the estimates are, and I heard that on Bloomberg, then that gets fairly fascinating. It's a low bar. Get a higher number than that, what does it mean? But traders don't get sucked into that. They just look to see what it looks like it's trending and doing. Do I think you can drop off a bit? Yeah, summer's coming to an end. I'm not hiring kids to run camps anymore. I'm not hiring new outdoor staff. I'm going to be cutting back on that as the weather changes in parts of the country. It's not ready to change yet, though. We're going to be starting in Chicago again in the 90s, right on through early next week, through Monday, Tuesday, the holidays. That could have an impact on soybeans. I don't think it matters to the corn market. It's pretty well made one way or the other. The crop tours are over. So now the next steps are we start watching the different harvests that are going on. And yes, harvests are going to go on. You're in September, many parts of the country. It'll be like that. Keep your eye on the fires and the dryness. Did you hear how many fires were in Louisiana? I think it's a record. They had 400 this year. There's 4 right now, big ones. Louisiana, I always think of that as moist. It's not going to have fires. I have a son that's a firefighter. Not firefighter, he's a forest ranger directing the fighters, the rangers that are fighting the fires, where they can put bulldozers and everything in Northern California. And he calls me each morning, 4 in the morning, and we're talking, goes, whoa. He loves the action, but he says it is grueling out there and the fires are big. So interesting as to what goes on. All right, so as we take a look at the indices, again, I wouldn't be surprised if you pull back here to the 18-day average of closes before all is said and done. And the reason is on the weekly chart how the momentum is. On this particular chart, you do have a pattern of lower highs. You're trying to make higher lows. You're right now caught with resistance at the 18-day moving average of closes. You'd have to get over this high, which was the, 44.85 level, basically, to get and say, the market's ready to turn up and give you some short covering. That could trigger that. One of the spots that then might go is the upper Bollinger Band. Do I have a lot of faith in things at this particular time of the year? I don't. This is when you want to trade very light. Be careful. Markets have stop and go because you don't have the thickness. How's that for a word? Between the bids and offers that you normally do. Just use a lot of caution. Momentum up, and you're into the resistance area. In the NASDAQ, you already have the swing line up. You're fighting at the 18-day average. Momentum is up. If it caught on fire, like that word I'm using again, maybe you get to the 15,105 level. My problem is, why would the market rally much right now that we know that the Fed is still looking very hard at this data, and this data, you're going to be gambling, is it bullish or bearish, all right? That's a rough one to gamble on since you know the Fed isn't going to cut rates. Did you look to see how some of the auctions today went? Over 5% for, what was it, a 2-year note? Whoa, it's pretty big. In the micro Dow, you've got now a higher high, lower low. I had told my subscribers not to be short this. I said, I hate when you go short the first time that you haven't been there into 100, let alone a 200-day average in a Bollinger Band. Now you've lost the bearish embedded reading. You might be headed all the way up here to the 34,851 level. It's the same thing in the Russell. The momentum's turning up in the same exact pattern. So I can make arguments for them to get there. It would take a piece of bear news to get under these break lows that we just saw in both of them. It could happen, but I've got my doubts about it temporarily. Then we get to the bonds and notes. And as soon as we lost the bearish embedded reading, I was looking for prices to go back to the 18-day average. That's what it's done. And now the market's looking to see, what do I do? Does it dare try the upside and make a statement that we've seen the worst of the 30-year yields? That would be what it would have to say. I don't know that it can do that. The 5-year is screaming that as long as the red line stays under 20, that the pros will probably probe the short side of the market, seeing if the market fails against the 106 area or not. In the dollar index, you have a bullish embedded reading, which means pullbacks in the market likely to get bought by the pros. In the eurocurrency, still have a bearish embedded reading. So on rallies, until the red line closes over 21, I think the pros are going to sell it. So still selling the euro, buying the dollar. British pound got under the Bollinger Band during the Jackson Hole Symposium and is now trying to get right back in it. It's oversold. I don't see how this market holds up very well, but on rallies, which we all want to see, will it get rid of the oversold condition? I don't see a setup for a trade. Bitcoin remains, to me, still very much in the bear camp. Until the red line closes over 21, I think rallies get sold, and the potential is to 25,149 level, the 200-day moving average of closes. Brent versus WTI, as long as the market stays over the 18-day average, basically, while you're getting a correction where Brent just lost to it, overall the markets are looking okay, and they're both in trouble in the sense. Notice what they're fighting against, the 18-day average of closes in both. So they're just coming out of oversold territory, getting a bounce. They're not screaming. They're ready to go to the upside. A lot of that has to do with China, which has now got a lot of the world thinking, just what the heck are they doing? Because it affects everyone. New Zealand, for example, just cut its budget. They've come to terms with the fact that the big rallies they thought that they'd have for their natural resources to sell to China, not going to be the way it was because the Chinese economy slowed down too much. And I told traders, first thing this morning in my subscriber video, I said, don't hang around. Now, just take your money. You made your money on your seasonal basis if you followed that. And in nat gas, we're all waiting to see come September 1st, does Australia get strikes against their 3 big LNG operators, or is the strike averted with the unions accepting the vote? Woodward Group has a deal on the table. Nobody's accepted it yet. They're going to keep you going right to the end. Be careful. This market isn't trending at this point. Remember what I just said? Your 40% off Labor Day sale. It's only a few days. Take advantage. IraEpstein.com research or click up here. That's the way to do it. I'm Ira. I'll see you tomorrow.